The views expressed in this podcast are not to be taken as either trading nor financial advice. Neither the announcer nor the Sirius Report make any claims to be certified financial advisors, and all reporting is dedicated solely towards being both informative and educational. Greetings, everyone, and welcome to a Saturday edition of the Market Wrap-Up for Saturday, October 19th, 2024. Now, there were a few things that happened yesterday of significance that I think are really important to discuss and something to look at as we go into the future, both for the rest of this year, for what happens prior to and after the election, and for the financial system of the United States. What do I mean? Well, we had the first bank failure take place last night since April. We had gold and silver. Gold reached or closed at a new all-time high. Silver reached a new all-time high closing since 2012. And we have the biggest removal of deposits from banks since the Silicon Valley Bank banking crisis of about 18 months ago. So with that in mind, let's go ahead and take a look at these events and see what we can glean from them. Okay, well, the FDIC came out yesterday afternoon in the evening and declared that First National Bank and Trust of Duncan, Oklahoma requires insured deposits of the First National Bank of Lindsay in Lindsay, Oklahoma. First National Bank of Lindsay, Oklahoma was closed by the FDIC, which then appointed the FDIC, well, I should say, comptroller of the currency, and then the FDIC receiver. The sole office of the First National Bank of Lindsay will reopen as a branch of the First Bank and Trust Company. Now, that's not what is important. What's important is we take a look here at the numbers. First National Bank of Lindsay reported total assets of $107.8 million, total deposits of $97.5 million. Approximately 7.1 million of these deposits exceeded the FDIC insurance limits, over 250,000, and this amount is likely to change once the FDIC gets more information. But the key thing is that there was here it is. The FDIC will have to pay out about $43 million to depositors. That's not the highest that we've seen in a long time, but with what's happening with the national debt, the budget, inflation, interest rates, and what we're going to see in another chart here in just a moment, the potential for more and more and more banks to start falling by the wayside is a real possibility. Okay, as I mentioned, here we have the total debt right now, record 35.768. They finally came out with the numbers for the fiscal year. That fiscal year ended up having $1.8 trillion of deficit spending by the federal government. That's, just their official numbers. It's been actually quite a bit more. And the more significant thing about that is, let me see if I've got here. I'm going to get rid of you. Total interest expense for 2024 by the federal government. This is $1.2 trillion. So we are well above $1.1 trillion and heading towards $1.2 trillion out of the budget goes to pay interest on the national debt. So if we had a $6.3 trillion budget, add in $1.81 trillion of deficit spending, so that's what, 8.1 trillion, approximately 1.2 trillion of that is going to national debt, but that comes out of the 6.1 trillion because it's paid from taxpayer funds, not borrowed money. So 6.3, 1.2, we're talking nearly 22%. Is it quite? No, not quite. More like about 18%. 18% of the federal budget of our taxpayer dollars goes to pay interest on the national debt. And this is at a time when just in the last month, they added an additional $500 billion, $500 billion to the debt itself. And intentionally, depending on what happens in the election, They are going to spend like drunken sailors as much as they can because they don't care. This is all about getting what you can, seizing the assets before the whole thing collapses. And needless to say, it will collapse in some capacity or another. But in response to this, we also had gold and silver hit major highs. Gold was up $28.30, 1%, to $27.21. That was the close going into the weekend. But take a look at silver. 6.4% increase over $2, which is something that hasn't been seen in more than a decade, closing out the weekend at $33.78. Now, the important thing is silver still is a good 16 point some odd away from its all-time high. It still has not surpassed at the close its 1980 all-time high, which means that it is by far, especially in relation to inflation, the most undervalued commodity on the planet, period. Everything else, every other single commodity since 1980 has surpassed its all-time high. And as you can see, gold has done the same. As a matter of fact, gold is a good 3 times what it was in 1980 at $840 an ounce. 2,700, you're talking a good 3.4, 3.5 times the amount. Silver was at $50 an ounce in 1980, and it's, like I said, $16 and some odd below that, not taking into account inflation. So if you were to multiply that 50 times 3.5, the same rate that gold has gone up, silver should potentially, probably, inevitably be about $150 to $180 an ounce, based on what gold has done in relation to its 1980 number. Anyway, don't want to keep this market wrap up too long, but just definitely wanted to talk about some serious things that were taking place. The one last one I was going to take a look at, and this is an interesting point. I need to find it here. I think I've got it. Nope. It's in relation to... Oh, I had already mentioned about it. Yeah, there was actually the deposits. I think $69 billion was taken out of banks at the close of Friday. Now, much of that was moved into money markets. Much of that was moved into gold and silver. Much of it was moved into equities, purchase of equities or other things. Very little went into treasuries. Most of it went out of the banks into money markets. So more and more of the big players are not trusting in banks to hold their money for long periods of time. They're storing it in other things like the money market, in equities, or in something else. Just something to take consideration, because there's an old adage that says, if you want to get rich, do what rich people do. Well, if you want to survive, you do what rich people do. And it's worth taking a note and a look at what they do. Anyway, thanks everybody here at the Sirius Report community for stopping by to get your quick update. Don't forget to subscribe, like, share, comment. Pass this on if you think it's important to anyone. And until the next time we get together, which is likely Monday, have a great weekend.